Let's get more from its chairman. Patrick Elliott joins us from Sydney this morning. Good Monday to you, Patrick. Let's talk about what's happening with your share price at this point because it's falling about 3%. It seems that investors don't have much confidence in this change in CEOs. What do you have to say to them?
I think it's always very difficult to judge what happens in a share price day to day. I think the important thing is that we'll continue to rack up a good track record of sales and profit, and the earnings will speak for themselves. We certainly have a lot of confidence in Terry Smart, who has been with the company since Richard joined back 10 years ago and has been very instrumental, although perhaps not as much in the public spotlight as what Richard has.
Yeah, let me just ask you something, Patrick. You know, we were talking about government stimulus earlier before we got to this interview, and you'd say that JB Hi-Fi has been helped by a lot of stimulus spending in Australia. With that being taken away, do you see that maybe impacting earnings in the next while?
Well, we said a year ago when we were talking about the results from last year, where we did have the direct impact of the stimulus, we didn't see a big spike in sales. We saw consistently good trading throughout that period and then into the new year. And I think that's meant that, you know, we're probably cycling a little better against those prior periods and some other retailers that perhaps got a bigger lift. Being a discounter, you know, I think we trade well all through the cycle, not just with the government support.
Okay, and being I guess a discounter, you've been expanding quite aggressively, some would say. In fact, your earnings are pretty much boosted by last year's expansion. So people are looking ahead to this year. Any new acquisitions for you?
Well, I think we're very much focused on the core business that we have, JB Hi-Fi. We're looking to continue to roll out stores. We'll have 22 stores open this year, looking for another 13, 15 next year. Certainly from an M&A perspective, there's nothing on the agenda, and I think we're very much continuing to focus on what's developed and supported our earnings growth in the past.
Yeah, Patrick, how are you going to sustain sales growth at this point?
Well, what we're finding is that the recently opened stores, we've opened over 50 stores in the last 3 years, they continue to mature and drive a lot of new growth. We're also seeing and continuing to see developing new categories, and you know, interested obviously to see the news this morning on your program about the impact that e-books, the iPad may have on the industry, and clearly as a retailer of electronic products, that's got to be good for our business.
Yeah, and when will you be getting that all popular iPad? Any Apple product seems to lift the market, so you tell me.
Yeah, no, they've done a terrific job over many, many years of developing killer appliances, and I think certainly a lot of hype about the iPad will drive consumer interest in sales. It's due to be released here in Australia March, April, and being Apple's largest customer in Australia, I think will certainly be up the top of their list in terms of allocation of new product.
And what exactly are the hot categories at this point? Is it tablet readers? Is it netbooks? Is it you know, e-readers?
Well, I think the e-reader, the iPad, for instance, it's still a very emerging category. It would be insignificant for most retailers, but I think very much people are looking at how those categories develop. They're obviously very high growth, and they may become material some years from now. I think the traditional categories for us are still going very strongly. We're seeing still a lot of interest in the visual category. The Consumer Electronics Show featured a lot of 3D TV, which is probably still some way in the future, but visual, for instance, year in, year out, continues to drive a good level of sales.
All right, and one more question for you, Patrick, but going forward with sales, what do you think you need to do to continue seeing this sort of growth, and what kind of growth are you looking for 2010?
Well, we've said that we should do $2.8 billion in sales for the full year, which still represents a very strong growth on last year. I think it's about executing very well in store. We continue to look and refine our product set, put a lot of training into the staff. You may have noticed in the half year we continue to reduce our cost of doing business. It was 13.2% for the half, which we think is the lowest of any listed retailer here in Australia. And if we continue to focus on our costs, deliver good prices, we'll see those sales come through.
All right, Patrick, actually I lied. One more question for you. Let's talk about the Australia dollar, because I'm quite interested in the AUD these days. In fact, a lot of people are. But has that impacted your business at all? Has it helped? Has it hurt?
Look, surprisingly, I guess for a lot of people, it has very little impact on our business. It was only a year ago that we were buying product, if you like, at around 63, 65 cents. It then rose close to 95 cents before settling back a bit. So what we find is we're buying from the Australian subsidiaries of the global multinationals. what happens is that the manufacturer tends to expand or contract their margin with swings in the Australian dollar. The retailer generally takes a much more smooth number. As the Aussie dollar's increased, maybe there's been some price deflation. We probably sell more product, but it has a relatively little effect on our overall business.
All right, Patrick, hopefully you get better weather in Sydney sometime soon. Thank you for your time this morning. Patrick Elliott, chairman of JB Hi-Fi.